Hi guys, welcome to the post-market analysis video of the 22nd February 2022. The markets are all over the place. Markets in such scenarios react to global news. You know that markets all over the world are volatile right now. Global markets are volatile, and American, German, Australian, all markets are volatile presently, and that is affecting SGX Nifty, and that is why the huge gap down that we saw today in Nifty. And Nifty was indicating SGX Nifty rather was indicating a 250 point gap down today, even before the markets opened. So let's see where we had an open today. This is the opening candle, so let's see what was the opening like. So we know that this was the PDL, the previous day low. Let's measure this area and see what kind of gap down we had in Nifty. We kind of had about 180 point gap down in Nifty today, and thereafter markets were absolutely jittery. The entire day price has been going all over the place. You can see this, and there has not been truly any specific trend in the market, although you can see that the opening is here, and then from here it made a high up to here. That is the level of around 17,150, and the open here, as we can see, is around 16,893. So there we can just measure it in points. What was the open to high for today? That was around 255 points, and in spite of that there was no real entry point as far as my strategies are concerned. If you are, those of you who are following my strategies would not have found any entry points today. Now what happens here is, let me just explain the price action here. See, the market opened with this green candle, but you have sellers here in this first candle. There are sellers on the top, and it's a green candle and obviously a big wick on the bottom, so there are buyers on the bottom. So markets are undecided right from the opening candle. So what can you deduce from this kind of a market? See, the first thing is market gaps down heavily. So this was the previous day low, and it gaps down here up to here, and then here it breaks the S2 pivot also. Now here was the S2 pivot here. Okay, so the gap broke the S2 pivot also, and here is the S3 pivot. See, I can show you the S3 pivot here, and it was below the demand zone that we had marked. That was the demand zone coming from the 15th of February 2022. Okay, so price took support right from the demand zone. Almost at the demand zone it took support, and that is where buying came from. But you can see the price action here. There was no clear indication whether there was going to be a good upside move or a good downside move. Now mind you, today the CPR was extremely narrow. Look at this. This is the CPR for today, and it's absolutely a single line. Okay, so CPR was very narrow, and yet you can see here that price did spend some time around the area that we had marked yesterday. That was the zone we had marked, and it took some time to break that zone for price, and then it consolidated around the same area, and then from here within this zone it took selling, came down, then again there was a consolidation mode here, then from here it again was pushed further back down, and then it recovered a bit. Then you can see there is another small consolidation here, and then a massive jump from here. Look at the size of those candles. Look at the 1:55 p.m. candle right up to the 14:20, that is a 220 candle. So you can see the size of all these candles. Massive green candles, isn't it? All these are strong Marubozu candles. So such candles indicate a strong buying. But technical analysis does not show us here any specific reason to enter on any of these candles, because it is very important as far as an intraday trader is concerned to enter at the right locations at the right points. So no real spots to enter today. There was no real entry point today. One important zone to enter, as I always tell you, is when the CPR is broken. CPR was here today, and price never reached the CPR today after it gapped down. But another important area where you can call it a breakout is at the previous day high and the previous day low range, right? And see, what happens here is the previous day high and the previous day low range is the range created by the previous day. Okay, so these two ranges right here, they were given to us by the previous day. Now these ranges are very important. Okay, and most often I have seen that when price opens outside the previous day's range, the previous day's range acts as a strong resistance if it's on the bottom, and if the price is opened above the PDH, then the range is a strong support. That is, the PDH is the strong support. So in that accord, we can think and we can say that probably this candle right here, and I'll just tell you which candle it is. It is a 210 candle. So the 2:10 p.m. candle right here happens to break into the previous day's range. Okay, the previous day's range is broken. Why is the previous day range so important? See, because you know that the previous day's support lies at the PDL. This is a support, isn't it? And it's a strong support. Okay, so you know that price has bounced massively from here on the previous day. Now only such PDLs or PDH are important. Okay, that is why I always tell you in the videos, analysis videos, which PDH and PDL have to be marked. You have seen that many times I don't mark the PDH PDL whenever there has not been a fall on the previous day. So check this out, there was a fall here and there was a fall here also, PDH and PDL, and that is the reason why if you can see here, we have marked the PDL with this blue line here, sorry, the PDH with the blue line here, as well as the PDL with the blue line here. So that is why I mark those areas, because of the bounce as well as the crash from PDH and the bounce from PDL. So you can see here that the demand zone here, that is on this day, that is the 21st of Feb, is acting as a strong resistance whenever price comes from the bottom. So you know that this right here is a strong resistance. Okay, so this candle has overcome, let me just zoom this for you, this particular candle, okay, has overcome the resistance. It has broken the resistance and it has encroached into the previous day's range. Now when a strong demand zone like that is broken, that means that it is a breakout, because if you are a breakout and a reversal trader like me, then the bread and butter formats for you or the patterns for you are to see where demand supply zones are broken or some major resistances or supply zone or other supports are broken. Okay, so you have to trade on those patterns. So this was a good point to go long on in Nifty, okay, because it had broken the previous demand zone, which was now acting for today as a resistance. So a major resistance was broken. So a good entry point would have been to enter long here and to keep your SL below this candle, so that you can have your SL below this, so that you can usually target a profit booking at the CPR, right up at the CPR. Okay, right here. So that is one way to trade on such kind of patterns. But today that pattern was not very good to take, because in Bank Nifty was still below the previous swing high. Let me just show you Bank Nifty. See, you can see that this being the 1:55 p.m. candle, you know that price had dropped from the level of around 37,367.70 previously. So let me just mark that level for you. See, this is the level from which price had previously fallen. So now this area becomes the swing high, the previous swing high in Bank Nifty. And now you can see that this candle, although it is strong, like we saw those strong candles in Nifty, it is still below the previous swing high in Bank Nifty. Okay, so that is why Bank Nifty can take resistance again at this zone here, and then it can fall again, especially when the market is so volatile. So that is why that was not a very good trade in Nifty. See, you can now see here that this candle, this particular candle, after it broke out, it formed another strong Marubozu candle, but from here it could not cross this area. It took a high, made a high and then fell. Now truly there is nothing explaining this phenomenon in technical analysis, and it doesn't matter how good a technical analyst you are, it doesn't matter what kind of logics you use here, those logics have been failing in the market, and that is purely because markets are presently trading on pure news based reports. So you should not worry about these such kind of markets. These are highly volatile times, and if you are whatever position sizing you're doing, just be careful with that. Lighten up a little bit and go light on your positions, and ensure that you're keeping stop losses a little bit looser. So don't keep very tight stop losses, because volatility is very high. The chances are high that your stop losses can be triggered within the volatility itself. So that is my recommendation or my advice to you. Okay, now given on this price action, I will just let you know what kind of levels might come up next. So I'm not really sure if these levels will be respected particularly, although we have seen that the levels that we have been marking have been respected well by the market in spite of such volatility. You can see this. You can see the strong green candles that it took to break those levels, and you can also see the bounce that it took almost at the demand zone. Okay, but within the intraday levels there is a lot of volatility, so be careful. Okay, so what is coming next? We have an average kind of CPR for tomorrow. It is not narrow, so be careful trading tomorrow. It might again be a sideways day. Now you can see that there is a bounce coming from this zone here, and it has taken support here also. So that level has not been broken today. So let us go ahead and mark that level for tomorrow. See, market turned from here, and we can mark out that area. See, we can just extend this line here, and we'll just mark out that area. We can also obviously mark a zone there, a small zone, but this should be enough. If you are comfortable with marking zones, then you can put a box around it. See, you can just put a box like this, small box. You can include the S1 pivot there, and you can just drag this area out like this. Okay, and now you can delete these lines, and now you know that this particular zone happens to be a strong demand zone. Okay, so when price hits this area, just be careful, because price has taken a bounce from here, and that bounce has come after a certain level of consolidation within a specific area, within a specific zone. So just be careful about that. And there is another area which is this, that needs to be marked. So I'll just mark it and show you which area I'm talking about. This is the high I'm talking about, which was taken out by this candle right here. Okay, I'll show you. I'll draw an arrow here so you can see this candle here. Okay, but this was a 205 candle. So if you want to mark it, you can mark it, but again the area is coming right within the CPR. So let the chart stay clean, as I always say in every video. And you have this demand zone coming. You can, if you want, just extend the demand zone to match the wick here, and you can just expand it like that. Okay, so you know that your candles are taking support at this area. So this is the area covered, as well as this specific zone is also covered. So you know that you're covering and all those wicks that have taken support within that zone. Yes, so I think that's a good enough analysis in Nifty. We do not need to mark this particular CPR as a virgin CPR. It's a single line almost, and virgin CPRs do not work when they are very narrow. So you can just ignore that CPR. We have one area here which we can mark, is this area right here, which coincides with the R1 pivot also. But if you want, you can keep this area ready also on your charts. So just be sure that you mark that, because we can see that price had taken a fall here. That area was broken here. So here it acted as a support which was broken, then it acted as a resistance which was broken, and again here it has acted as a support which has not been broken after that, and price has not reached that area. So just be careful with that zone. We will keep that area ready for the next trading session. Just extend all these levels. I will post the images of these levels on Twitter, so ensure that you go to Twitter and grab these images. See, these areas are important because whenever price goes to those areas, it can cause a reaction there. So you're not really sure before the market opens where price will open. Now for instance, you did not know that price would gap down so much, right, overnight. But if you have had marked these areas prior, so if you had followed my advice and marked all these areas prior, you would have known that these zones are present, and these zones will indicate areas where price will bounce right before the market opens. So make it a habit to work on your charts by the evening or by the night time, or at least 1 hour before the market opens. Alright, now this is Bank Nifty for you. In Bank Nifty, we can see that this was the area that I had marked today morning. Okay, I just spoke about the previous day high and previous day low importance in the Nifty analysis, so I will not explain that to you again. But now see here, in Bank Nifty it was a very important area because this was the previous day low which we had marked, and you can see that here it was a massive demand zone. So as I said in Nifty analysis, this candle, the first candle here, again was a doji. It was a red colored body candle, but it was a doji, massive wicks on both sides, and it was taking resistance right where we had marked the demand zone. And you can see that the S1 pivot was at that level also. Okay, so now here, what is the important area when price opens like that? The most important area is here, this zone here. Okay, that forms the most important area. So you know that now, unless price breaks that level with a strong candle, you should not be trading. Okay, so now see what happens here is, let that area stay where it is. I have marked it with the black box. Okay, and you can see this candle here. I'll just mark this. See this wick. Okay, this wick was at this level, the blue line that I have marked. Now that important level where we had marked, this was the previous day, low, and this particular point was the day low, the current day low. Now this point becomes the most important resistance point. Okay, why? Because there is no candle body that closes above this wick here. Okay, so now it is only this wick that has formed above the first candle's wick. Okay, and that wick is inside the previous day's range, so your PDL is now stretched right up to this wick high. And now let's see, now if we mark this area, can you tell me which candle breaks that black line convincingly? So you can see this candle here which broke the black line convincingly, and since this area is the new high, you have now not to take any trade inside of the previous day's range until a strong candle breaks it. Okay, but look at this candle now. All right, just zoom it. Does it look like a breakout candle? This candle that I have marked with the arrow, see, it doesn't look like a breakout candle. Let's just zoom it up a little bit. A breakout candle, see, now this candle, price action tells you that it is not a very good breakout candle, but this candle is a very strong breakout candle. But as I just explained previously, the new high, that was the swing high, previous swing high, was here where price had reversed from, and this candle was below that swing high. So it was a risky trade to take, wherein you can trade on a long position with your SL below this candle, and then wherein you can keep your entry would be here, and you can keep your target at this area. So that is not a very good trade to take. It is not a very good risk reward either, and also the swing high at this area, at this level, prevents it. Okay, but the price anyway did go and reach the CPR. So as I said, usually it happens that, so you can see this area here, usually it happens that whenever a strong candle breaks out of into the previous day's range, then there is a strong move upward because a strong demand zone is broken. This was the demand zone here. A strong demand zone is broken, and whenever that demand zone is broken, there is a big move to the upside, and that move can most often reach the current day CPR. Okay, but that was not exactly a very good quality pattern in Bank Nifty today either, and Bank Nifty also was severely volatile today. Bank Nifty anyway is a very volatile instrument, but you can see the way Bank Nifty has behaved today. Okay, so massive movements intraday. Anyway, so looking at this, let's go ahead and check for the important levels now. See, we had marked this area yesterday and you can see the kind of price action it shows around that area. Okay, so such areas are important, but now since that area has been broken, we don't need to keep that on the charts. Price did spend a lot of time within that zone, but we don't need to mark it for the next session. Just mark the PDH today because price has taken a sharp fall from the CPR here. So you can see this area. And again, now let's see, you have a narrowish kind of virgin CPR for Bank Nifty, but it's not as narrow as it is in Nifty. Okay, so it's a good idea to mark this virgin CPR, although it's very narrow, but I would suggest you keep it ready because it is a supply zone also. Why? Because in spite of such strong candles here, and it still does not allow price to break the CPR, and it happened during the later half of the day, late afternoon. So usually late afternoon, such volatility, you can see that breakouts are strong, but it did not happen today, and there was a lot of volatility and price fell from the CPR today, but no candle body inside, so you can mark the virgin CPR. Again, an average size CPR in Bank Nifty for tomorrow, just like in Nifty, but it's a little bit narrower than in Nifty. And let's see what more areas need to be marked here. So we know that price could not go below this area, so what you can do is you can take this area into consideration. So mark this off. You can mark the open of this, the low of this red candle, the large red candle, and you can keep this area ready. And then you can also see that there is one area here where price could not break that level. So you can keep all those levels ready. Now these are levels because of market volatility, so these levels might not be respected tomorrow. So don't be under the impression that price will react to these levels exactly as we have marked. Generally we see that whenever there is news based volatility, the next day if the markets are calmer, they don't usually respect those levels and they will sail through smoothly within those levels. Just extend all of this. Now this virgin CPR comes from the 11th of February. Okay, just keep this in mind. It's a very old virgin CPR and it might not be very effective. I'm not saying that the price will reach it in the next session, but the older it gets, the less reliable the virgin CPR becomes. And the next few levels are already marked with us. So having said that, I hope you're finding these videos helpful and you are marking these levels religiously on your charts, and I hope that you are using the strategies that I have explained in the strategy section of my channel. Please go ahead and read those, watch those videos regularly so that you know exactly which scenarios you can trade in. See, this is price action analysis, and price action analysis takes a lot of practice. So ensure that you watch those videos repeatedly. Also guys, please share my videos. I need a lot more subscribers because that is the way I can reach out to more and more guys like you who are wanting to learn and trying to learn new stuff but are unable to catch on to the market. And don't lose hope, these are volatile times, so please hang in there, keep your positions light so that your SLs are smaller, and just ensure that you sail through these times so that when the market stabilizes, you can trade better and you will be happier at that time when you start making profits, and definitely those profits will be bigger than the losses you're facing at this point in time just because of market volatility. I think that should conclude the price action analysis video for today. Thank you for watching this video guys. If you've liked it, please hit the like button and subscribe to my channel. Also hit the bell icon, and if you haven't subscribed yet, please make it a point to subscribe because I can see from the analytics that a lot of viewers have not subscribed to my channel. They watch my videos regularly but they don't subscribe, so please ensure that you subscribe to my channel. Also share my channel with your friends and family, and if there are any other questions you have, please definitely ensure that you type them in the comment box below so I can address them. And also check out in the description box below, I have linked up all the books that I have read prior to help me in my trading career. So please go ahead, and if you want, you can download those books from the links that I have given, They are direct links to Amazon website, and do definitely check them out. Thank you for watching, guys, and I'll surely see you in the next video.